You might have observed that the number of days or candles between tops and bottoms is not constant value. I mean, distances between tops and bottoms are not the same, they differ every time. This is due to the fact that each top or bottom of the most of the time has got a different price, and because time and price are strongly related to each other, future extremes of the market depend on the price from the past. As W.D. Gunn used to say, the future is nothing but the repetition of the past. Good day to you, trader. Marhaba, salam alaikum, salamat pagi. This is Mario from Forex Other Way. And in today's video, I'd like to share with you an interesting concept of projection of price into time, or more precisely, how to predict future tops or bottoms of the swings based on the current low or high. So let's start the rock and roll. The method I would like to share with you is relatively simple, and it is based on square relation between the recent extreme of the market and potential future tops or bottoms. I've got in front of me a USD CAD chart, so let's see what we can get from it. So over here it is the market made a low, this green candle. Just let me zoom it in a little bit. This candle, it's well-defined low of the market, and let's see what we can get from this candle and how we can find something in the future, eventual reversals. So what I did, I put on Excel sheet, I put, that's the date, that's 3rd of May 2016, this is just a simple example, and put open, high, low, and close. And what now? Next, I've taken an average value of all of these, and just let me show you what's the issue. So let's unhide it, show columns. So here we go. Here we got open, high, low, close divided by 4. So I added up all these values and divided by 4, getting the average value, which is 1260.75. So the first value is the square root of this average, which is 35.5. Or so let's see what the market might say on that number after 35 trading days from this very bottom. 35 it shows, well, 35 bars. It shows this line. Let me just mark it for you. That's the line. That's 35 bars or 36 bars, whatever. So that's the first one, yeah? Okay, so we got well-defined another extreme of the market. But it's very small and it might have been distorted by the market makers whatsoever. Next value is that average multiplied by 10 in this column, which gives us 12,607.5, and the square root of it is 112. So let me show you what it can do over here. So let's mark this 112 or 113 candles from this bottom. Where is it? 117. Oh, it's over here somewhere. Here we go. So 112, 113 candles is another local extreme of the market, but it's still very short term, I might say. Let's just zoom it out a little bit, because we got the third number over here. The third number shows us it's the same value, this one, this average of high, low, open, close, and multiplied by 100, which gives 126,075. And the square root of this value is 355. So let's see what happened after 355 trading days from that particular low of the market. So this is this low on 3rd of May. Just let me get the ruler and draw it. And 355.65 is over here. Let's mark it. So it's really fabulous. It shows us this very bottom. So here we got the starting point, yeah? So that's the starting point here. Just let me mark it. It's over here a little bit, this candle. So in this way, you can roughly evaluate what potential turning point, future turning point of the market might be. Please observe, this is 355 days. It's just 10 days less than one full 365 candles as a year. But obviously, we are talking about the trading days, so it's not very, it's very close to 360, but it is not. And every time this value appears in a different way. Obviously, this value, this number of candles can be calculated more precisely. What I usually do, I calculate, as you probably know, I calculate it based on the square of 9, trying to find tops and bottoms of the market, where you can calculate the number of days, of calendar days, the number of trading days. And this all this knowledge I share with my students on my private tutorial sessions via Skype. If you are interested, just drop me a line. You'll find the address below this video if you are interested in such a training. But what I want to show you, so we got 355 days here, but the more precise value, I've got it calculated here. So this is the projection based on the square of 9. The projection of the price, of this price of starting from the date, and after recalculating it, all these calculations obviously are hidden here in columns between C and H. I don't want to reveal it straight on for free to you guys, sorry. But over here, I will try to find a number which is close to this number, to 355, and the square root of 9 says that based on the price from this 3rd of May 2016, the closest date is over here, which is 352 or 53 days from that date, or 352 trading days, the candles, because you can use the number as the calendar days as well, and it will work. 352, you might check it. I didn't check it basically, but let's check it. The calendar days will show us from this candle 352 calendar days are 344, 49, 51, 52. That's this local reaction of the market, where the market was supposed very strong support resistance line, static one. So that's 352 days, but 352 bars is a little bit further, is over here. So in this way, based on this method here, we got, an average value. The value very close to turning point is not very precise. Based on the square of 9, you can find the date where this value will be more precise. So let's mark it. And if we mark it over here, it comes like 11 September. And let me zoom it in. And it shows exactly the bottom of the market based on the price from May 3rd, 2016. So the next extreme point is over here. On this calculation, I marked on squares only. I mean, I marked these values are corresponding to 90 degree, which is square of this price on the square of 9, and 270 degree. I just neglected the other ones because on the squares most of the time a reaction of the market occurs. So let me show you another example, because I've got another one over here for you. Just let me show this rows. Is another date, which is 20th of January 2016. Let me just show you. And we remove the drawings. And this is over here, this candle. Another one. Over here, this is 20th January 2016. Here we've got the date, open, high, low, close. As you see, is around 1200. You can see upper over there, you got open 145.7 and so on, open, high, low, close. And based on this value, we can also do the same, calculating an average of open, high, low, close. So this is the weighted value of the price based on these four values. Square root of it is 35 days, nearly 34.8. Let me show you. Does it show anything? 35 days. It is like that. 35 bars we've got here. Let's just mark it. It would show a local small reaction of the market. The market tried to reverse here, as you see, because there was strong support resistance here. Unfortunately, it didn't. And strong momentum pushed the market lower. Very often it happens, even if you got calculated values of reversals, like this one, for example, it could have been a very strong reversal point, a reversal date in the past, but with strong momentum, the market just made a flat correction, didn't change the direction and continues upswing. It happens very often. Let's go back to this value. Another one is this value multiplied by 10, which is 12,122, and the square root of it is 110 days. Let's see whether it will show something. 110 days. Would it work, my friend? We don't know. I've checked it out, but this small value is 104, 110 bars. Here we go. Let's just mark it. And here we go. This is a local bottom marked. You know, this small candle here is market makers, you know, or market makers, or there are too many stops. They've been, you know, just shot out, and the market continued its slight uptrend. So there's the second one, which is not that bad, but it's not very great neither. But let's check the last one. The last one is, we got this value multiplied by 100, and the square root of it is 348. Again, very nice number. Let's check it whether 348 will show us something. So 348 bars further. Would it work? Not. We have to zoom it out a little bit. 348, where is our candle, is over here, and in this way we can try 344, 347, 48, and it's shown something, but not very precise. It is a local correction. So anyway, unfortunately, I didn't do the calculation for this value based on the square of 9, but let me assure you, it would definitely give more precise number, probably somewhere here or somewhere here based on the square of 9. So I encourage you to experiment with these numbers, using the square roots of the numbers, squaring the numbers, and so on, because it gives very useful results. This is so-called, Gann used to call it, W.D. Gann used to call it the holy geometry. The holy geometry which rules the universe. And in this way, you may also find something interesting. If you found it useful, just give me a like. If you didn't like it, just unlike this video. I hope to see you next time. Thanks very much for your time and for watching. I'll see you next time, and bye-bye.